Good morning and thank you for tuning in to another edition of the Vulcan Report. Today is Thursday, May the 6th. Right now you're looking at a chart of the euro dollar. Um, I've been telling you guys a lot of things, and I've been doing these videos now for quite some time. I'm doing my best to try to explain to everyone what's going on and how the global economy is crashing, and how they're doing every effort they can to program it and manipulate it so that it's controlled to the best of their ability. However, they're not doing a very good job at it, and I will say they've been pretty successful at convincing the American people to go along with the charade. So they pretty much brainwashed everyone, and they use the mainstream media to do it, to the point where they make you think that okay, for those of you who do not understand or you still need some convincing, I would strongly encourage you to go to the blog at pulsescan.blogspot.com, where all the articles and research and all the information you need is right there. I have tons of articles there and research and documentation to back up the things that I've been telling you. For those of you who don't need any more convincing, you don't have to be afraid of what's coming. The only thing you need to do is to make as much money as you can by just following what the globalists are doing. That's all trading really is. It's just following the money. You do what they do and you make money, and that way you'll be able to take care of yourself and provide for your family, regardless of what they do with the US dollar or any type of currency, or introducing new currency. You can always exchange old currency for new currency. I'd rather have $1 million in my account, and then if the dollar crashes and it's only worth $1,000, at least I have $1,000, versus the person who would have no money and be completely wiped out. So this is what you can do. I've also been telling you about gold and silver and how they're going to crash all the markets, because all the markets are manipulated. Remember, we trade not because there's some type of intrinsic value in the vehicle we're trading. We trade it because it's either going up or down, and we see an opportunity to make a killing. Okay, same thing with gold and silver. I don't trade gold and silver spot in my Forex account because I'm trying to accumulate gold and silver tangibles. No, I do it not because I think gold and silver is going to be the currency of the future either. It's not. I do it because it's a market and it's going up or down, and it can make me money. All right, let me show you how to, let me give you today's analysis and then show you how to understand all this stuff. Okay, as you can see here, we broke out of major support after a prolonged consolidation. We consolidated from March the 29th all the way until the current situation of April the 27th. So that's like a month's worth of consolidation before a final breakdown, and this is where we are today. We're also picking up some acceleration to the downside, but based on yesterday's activity, we could be pausing here a little bit before resuming another downside. We might try to fill up this pseudo gap, not a real gap, but it's like a pseudo gap right here. We may try to get back up to this this line here before breaking down again. So that's something that you're going to just take a look at. Just notice in the chart here. This right here is your bearish Kumo cloud. As you can see, we've been dropping precipitously in the euro. All right, let's jump right into some technicals real quick. So let's move the cursor over here to the report. All right, the Vulcan report review the US dollar as of Wednesday, May the 5th. It's always looking at the day prior, so based on yesterday's close. Okay, chart patterns. All right, a big red candle occurred. This is bearish as prices close significantly lower than they opened. If the candle appears when prices are high, it may be the first sign of a top. If it occurs when prices are confronting an overhead resistance area, such as a moving average or a trend line or price resistance level, the long black candle adds credibility to the resistance. Similarly, if the candle appears as prices break below a support area, the long black candle confirms the failure of the support area. During the past 10 bars, there have been 3 white up candles and 7 black down candles for a net of 4 black down candles. During the past 50 bars, there have been 19 white up candles and 31 down black candles for a net of 12 black down candles. The black candles occurred, 3 black candles occurred in the last 3 days, although these candles were not big enough to create 3 black crows. The steady downward pattern is bearish for the euro. All right. Looking at the swing index, all right, the pulse scan is at -29, and the swing VIX is at -29. As you can see, the pulse scan is still below the swing VIX, but not by much. So that's telling you that maybe the downward pressure may be letting up a little bit. Currently, the market pulse is negative. Okay, that's this right here. Since it's trading below its signal line, the pulse scan crossed below the swing VIX 2 periods ago, and that was here when we dropped below the support area. Okay, there are no long entries to speak of, and the system is not holding any long entries. As far as short entries, it's holding shorts from a first pulse wave of 131.22. All right, it's also holding a second short from a second pulse wave of 131.15. So basically added 2 positions right next to each other, basically. So holding those positions, and probably you may even look to take some profit off the table today. Don't be greedy, and you want to move your stops to at least break even if you want to hold and ride it. All right, as of right now, this me personally, I'm flat the euro. I don't have any new positions on right now. All right, the trend channel is down, so we have a negative swing VIX. This means that negative momentum is entering the market. Expect sideways to lower prices within the next 3 to 5 days. A buy or sell signal is generated when the swing VIX moves out of an overbought or oversold area. The last signal was an oversold buy 60 periods ago. The swing VIX does not currently show any failure swings. The security price has set a new 14-period low while the swing VIX has not. This is a bullish divergence. Since the swing VIX crosses moving average, the euro's price has decreased 2.58% and has ranged from a high of 133.30 to a low of 128.04. The market trend, currently the trend is very bearish and pointing downward. The current market condition for the euro is very bearish also. The close is currently below its long-term period moving average and its intermediate and short-term moving average. As far as volatility, the euro dollar closed below the lower band by 13.8%. Although prices have broken the lower band and a downside breakout is still possible, the most likely scenario for the current trading range that the euro dollar is to continue. We're 59.38% wider than normal as far as the distance between the volatility bands. The large width of the band suggests high volatility as compared to the euro dollar's normal range. Therefore, the probability of volatility decreasing and prices entering or remaining in a trading range has increased for the near term. The bands have been in this wide range for 1 period, which is 1 trading session. The probability of prices consolidating into a less volatile trading range increases the longer the bands remain in this wide range. That's all we have for the euro. Please excuse my son playing in the background.